One of the most underrated things in multifamily operations and investing are renewals. And renewals are simply when a lease expires and a resident opts to renew their lease and stay at the property for another lease term. Typically leases are 12 months, so after the first 12 months, it's a big vote of confidence and it's a great boost on cash flow when a resident decides to renew their lease for another 12 months. And the reason why this is so valuable is because turnover costs are pernicious. And when I say turnover costs, they're make-ready expenses, so that's cleaning out the apartment, paint, whatever other repairs and maintenance required to actually make the unit ready for the next resident. But that's not all. There's actually way more turnover costs because there's also leasing and marketing costs associated with turnover, and there's also more staff workload. So your team on site has to work harder just to maintain the same occupancy when you have higher turnover rates rather than great renewals. There's other turn costs as well, such as the hidden risk of your future tenant. If you just had somebody living at your community and they were a great resident, paying their rent on time, and you're offering them a renewal letter and they choose to stay, that means they're a great tenant that you are glad to keep. And if they were to move out, you would be looking to lease the apartment to a new prospect, and you don't know if that prospect is as good as the last one. So you have delinquency risk, you have skip risk, right? They might move in for a couple months, they might stop paying rent, they might skip, they might turn into a costly and lengthy eviction. So there's hidden risks associated with turnover as well. All this is to say that renewals are incredibly potent because if you can save, depending on the community, depending on the circumstance, it could be $1,000, $2,000, $3,000, $5,000 per turn when your rents are only $1,500, it's very difficult to actually justify a trade out, which means having someone move out and bringing a new tenant in for a rent increase, because the rent increase has to be really substantial to actually justify the turn costs. And I'm not even talking about renovations. So before even factoring in renovation costs, just a simple turn of, call it $2,500, which is a very light turn expense, you would have to raise rents by over $150 to justify the trade out, to actually prefer the resident to move out. And even then, the $150 rent increase may not be worth it. So instead of trying to shoo away your great residents who make your community by just trying to get a little higher rent, it actually might behoove you and your community to renew them at a modest increase that is fair for both the resident and the community.